Bob, thanks for waiting through the break with us. So all of this up and down and volatility that we're talking about, still the S&P remains historically cheap. Do you agree? What's your sense on valuation?
Yeah, I do think we are a cheap, Lori. When you look especially relative to inflation and interest rates, stocks are pretty cheap. Now, they're depending on the earnings to come through, but I'd even make the case with the sell-off we've had, if earnings were flat, the stock market is still not expensive, and I think cyclically earnings will improve. So I would agree with the notion stocks are pretty cheap.
Now, earnings have been improving, and so have forecasts, correct? So do you expect the similar trend, or really just to kind of remain flat? Like, if you could characterize that a little more for me.
They'll definitely move up from here. The question is, and that's what the market's struggling in, at what pace? We were in an environment where kind of every time you turned around, some company or some strategist was taking the number up for earnings of the company or the overall market. Now things are a little more questioned about does the contagion from Europe slow our economy, et cetera, and the jury's out on whether the answer to that question is yes or no. My guess is it gets nicked but doesn't get destroyed. That is our economic recovery, and it will resume at a reasonable but slower than normal pace before too much time goes by.